All right. All right. Good morning, traders. It's been a while, a little over 12 hours since we've seen each other. I know. I missed you too. Good morning, Doug. Good to see you. Good morning, Jago. Good morning, Peter. Morning, FP. Good to see everybody. Morning, Kyle. Kyle, your name seems somewhat unfamiliar. Are you new or fairly new? Pretty new? If I missed it earlier, I apologize. But thanks for saying hello. Glad to have you. Brand new. Love it. Well, then thanks for saying hello, especially. Welcome to the group. All right, let's dive in. I still don't have my fancy recording software loaded on this, so I'm relying on the Zoom recording. So it starts right when the meeting starts. Um, your alerts are going off. Which ones? um, okay. Welcome everyone to the Options Income Launchpad Wednesday Market Midpoint. My name is Scott. I'll be your host. Most indeed. Morning, Victor. Good to see you. Morning, John. Morning, Mike. Hello, Sandy. As always, what we do is for education and illustrative purposes only. Nothing's intended as a recommendation to buy or sell. We're not brokers or advisors, so we don't give personalized investment advice. Decisions made based on information gleaned here should be done so at your own risk. Yada, yada, yada. Well, I'll tell you what. Even at 5 this morning, my dogs woke me up, wanted to go out early, check the futures, obviously. From figure that's what we all do when we can't sleep at night is check the futures. But I couldn't sleep because the dogs woke me up. Check the futures 5 o'clock. I'm like, oh, okay. Okay. Looking pretty good. Let's just dive in since they're open. We know what we're doing here. So here it was. Um, yeah, right around this time of day, and I'm like, look at these futures. And then I woke up and got myself some coffee just before this presentation, and I saw us back down here, and I thought, well, that's not good. That's not good. Um, so what happened? PPI. PPI. And it wasn't a yeah, but it was a yeah and right. It wasn't like, yeah, but the war is causing prices, so we're gonna take that with a grain of salt, right? We're gonna be like, yeah, let's temper our reaction. This was a yeah, and add the compounding effect of a huge increase in recent prices and due to fuel, and it's not great. Uh, what was the? Let's see if this is updated. Yeah. Okay, so point 0.5 was forecasted to fall to point 0.3, and it jumped to point 0.7. Point 0.7. Point 0.4 was supposed to fall to point 0.3, jumped to 0.5. 2.9, our year over year for the standard number has jumped to a 3.4, and our 3.4 moved to a 3.5. So I would kind of put this one right in the 3.4 to 3.5 area. As we've been saying, boy, it'd sure be nice to get things moving towards the twos. It's the things that are in the low threes to the high twos, the things in the high twos to the middle twos. That's what the Fed wants to see. Um, filled my, yeah, 3/4 of a tank. Unbelievable. Unbelievable. Yeah. Yeah, it's not good. So there it is. That's what's got the market um flustered. And what are the expectations that we're going to get some measure of respite from the Fed? Minimal. I mean, the best that we're hoping for from the Fed at this point is possibly some verbiage change in regard to, what the increased pressure put on the economy from this incursion/war will have, based on commodity prices spiking, oil spiking. Woo, okay. What's next this week? Still have jobless claims tomorrow. We had a bad jobs report this month for last, showing a loss of jobs. We haven't. Oh, interest rates went up today in Australia. Up today. A rate hike. Interesting. Okay. Um, Zero from Fed. The market. Well, unfortunately, we get ourselves into situations where we, you know, suckle at the Fed to some extent. And you can see, in the way that this administration has put on a high pressure campaign to get interest rates down. They believe that there will be easier economic success with low interest rates. You hear guys say, we need to lower interest rates to make our debt cheaper. And it's like, that's not the job of the Fed, right? Like, we don't get to just change objectives and be like, you know what, we'd like a short-term bump in the stock market, cheaper debt payments. It's like, well, what about the actual impact on things like jobs and inflation, which is what the Fed is supposed to do. So I think that that's actually what the Fed is trying to do and has been trying to do is implement. They need to channel their inner Greenspan is what they need to do. Channel their inner Greenspan, create some um opacity. I don't know what the word is. The opposite of transparency. Shut it down. We don't need to know everything you're thinking. Give us a sense of what you're looking at and play them a little closer to the chest. That's what I'm looking for from the Fed is, yeah, give us a little bit, but not too much. Okay. Um, the last we checked, it was October. Um, well, that may be shifted. Current. Yeah, you can actually see that there was a little probability measure added um, for a potential hike rather than a cut. Let's just play it through. So now you can see this is a hike, this is a cut, so it's pretty flat. Now you can see that there's starting to orient more towards maybe there's a cut coming. That's in June. July gets to 27%. September, it's getting close. Still, it looks like, October, maybe December. If they can get things figured out, that's the first. So for us, what does that mean? Let's take it out of the, we're not going to see the Fed help. What we get from the economy is what we get. I think that's better. Little recovery here, you can see, which is good. We're catching a little bit of a recovery. Let's switch this back to the SPY. And you can see our first three candles, our recovery candles. 1, 2, 3. All right. We're going to have to process it. Hey, Vladimir, good to see you. Good to see you. We're going to have to process this as the market and kind of see. We have a low established from last week that we're playing off of for this week. Yeah. Yes. Here is the trade alert from yesterday. If you missed it, Palantir up marginally this morning when the market's down. So okay. Yeah, good reward to risk ratio. Pretty good option prices. Implied volatility is low for this stock. I'll tell you, one of the things that really was good to see was the spreads. Who took this trade and who noticed how the spreads looked relative to some of the spreads we've been seeing. So here's kind of the logistics entry range. We're still in that range. I think we're still in that range. 155.5, right in the middle of it. Stop a little down here. We're looking at 5 to 7. 6, 5 to, yeah, if I don't know, 5 to 8, I guess is the most it could be. For risk, good potential target if we get a similar move to the last one. Nice area where we can take a little profit off the table. Solid reward to risk ratio. I went with some out the monies. Somebody else mentioned that they built the spread. Okay. There's no wrong way to build the trade. There's different ways that have different advantages and disadvantages. You could build this as a naked put. You could build this as a bull put spread. You could buy the call. You could do a bull call spread. There's, as long as you have a sense of where do I know I'm wrong and how much do I lose with the trade that I'm building if it gets there. So for this particular trade, buying these for $2.12, I'm putting a good chunk of that at risk. 60%, more than half, because it is an out of the money option. But it also, based on the logistics described above, produces the highest reward to risk ratio over a 2 week period. Usually I go 1 week when I'm figuring approximately how much will I lose. I don't look at like, well, how much right now? No, you got to go out. I usually go a week. And I say, what if I'm wrong a week from now? Why do I do that? Well, a week from now, the loss is going to be worse than it is today because if you buy the option, time is decaying. It's every day you lose a little more. So uh, I need to make sure that I'm taking that into consideration when I'm position sizing so that I'm truly understanding what's at risk. If you put on a naked put or a bull put spread, or excuse me, a bull put spread, you might be time positive, which means every day that you're in the trade, it's a little better. So you would actually look at your loss on day one and be like, what if it stops out tomorrow? That's worst case scenario. If it stops out a week from now, you'll lose less. So great. That's a reason why that trade exists is uh, positive time decay, putting an element in our favor. A bull call spread is going to be probably negative time decay, but at a slower rate. So you're not going to lose as much as you would if you just simply buy the call. They're all bullish trades. They all have a risk if you're wrong. They all have a reward if you're right. Which one's going to make the most? If it achieves its objective, the out of the money option is going to have the highest gain, followed by probably an in the money option, followed by a bull call spread, followed by a um, naked put, followed by a bull put. I don't know, maybe that in that order. A bull put spread and a naked put are capped. You can only make so much. They need time to decay. So if it happens quickly, you probably are going to have to close the trade and take the gain, even though a lot of the time hasn't evaporated in your favor yet. So there's just different elements to think about. Kyle. Oh, Kyle. Yes, right. You saw it. We've seen some. I mean, I'm talking like IBM, Caterpillar, where I'm like, what the hell is going on with these spreads? I mean, they're 15% between bid and ask. And so, anyway, getting something back into a good, reasonable, tight level was refreshing to say the least. Okay. So that's the gist of this one. Let me know if you have any questions. Let's go back, take a peek at the market, take a peek at the VIX. Okay, so it's kind of sitting in there. We can survive this if we come out of it. We can survive it. We now have almost in 1 minute. We'll have our opening range. And I like to draw kind of a dotted line. And we could probably put this dotted line in. And now I've got about 15 seconds. And then my first four candles, which is 20 minutes, are complete. So this will go boom, new candle. New candle and opening range is established. Yeah, if we can break the upside and hold on, I think we could end up back at 671, 672. If we break the downside, if we break the downside, then it's going to be a little iffier. I'm going to lose my chart here. So let's just back out a little bit. Find what's next. Yeah, we could end up down here. We could fill this gap potentially. We'll see. Okay. Sarah asked a great question. She said, "How to interpret Palantir when price go up but stochastic goes down?" Um, Now let's check our stochastics. My stochastic is a stochastic slow, which is just the type of indicator, um, or type of calculation relative to a standard stochastics. When it comes to actual speed, fast or slow, our settings are going to be much more um, our settings are going to be much more impactful on that. So my settings are 70/30. Remember, all that means is where are my green bars? You can't see the other one because it's hidden behind this purple number that tells you where this is. But my green bars are at 70 and 30. And then the second are 7 and 3. That's my time frame. So this faster line that's already turned is looking back 3 days, right? To get this. So from here, it's looking back to there. And what's happened? Well, you can see what's happened is it's going this way. So that's why this line's moving that way. The other one is 7 days. So now we have to go 1, 2, 3, 4, 5, 6, 7, and we go back to here. And you'll notice that, yeah, we're kind of just coming through this because now it's competing with, a couple of days before it was competing with this. So obviously that's why these things are pulled back, is it's orienting around that price back there. 7 days and 3 days. The more data you have, the more it'll change what it's looking at. So a stochastics, 80 20 10 3. So the 80/20 just means that your upper and lower zones where overbought and oversold are smaller. I just like mine a little bit bigger. 10/3 means yours is going to be a little bit harder to turn because it's got an extra few days. You can go in and change your 10 to a 7, and then yours looks like mine. Or if you like your parameters, keep it as is. But if there's ever a time where it looks like one's working against the other, what's probably happening is you've got to make sure that you're seeing all of the data that's being incorporated into that indicator. And so yours being 10 days, you're going back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're back here. And so it's just going to have different variables in its calculations. It's looking at where is it now relative to the highs and the lows of those previous 3 and 10-day periods in order to see when the momentum is shifting, because it's at just closing at the highest point, closing at the highest point, closing at the highest point. That's the kind of thing that moves it higher. Or if it's closing at the lowest point, that's what moves it lower. So yeah, hopefully that makes sense, because there are times you're like, wait, why is that? There's, and it just kind of boils down to how much data is being incorporated. Should we adjust accordingly to which stock? No. So you're saying, like, do I change my technical parameters? I always caution against that, where people are like, oh, I would have people who would be like, I'm going to go find the best moving average for each stock. And so they would try to find like a moving average where it's like it's bouncing off of it here. And so they'd be like, the best for this one is a 37, and the best for this one is, and then, a week later, it wasn't. So I'm like, you're just chasing, you're trying to like reverse engineer, backwards optimize. When I think, I think Sandy said it best. Remember that if we were to break down percentile, like what are we looking at? Trend is 50%, support and resistance another 20 to 25, candles and volume another 15. Right, by the time I get down to stochastics, it's just confirmation. It's just like, what do I expect to see here based on what I've already established as the story? And that's how I would recommend you think about it. Tell a story. Tell me a story about buyers and sellers, and really dive deep. What's their motivations? What's their fears? What are they trying to do? Where are they concerned? Right? So that you come in here and you say, oh, well, on Palantir, here's the story. The story was that there was a period of heavy consolidative pressure where it dropped from 195 to 125. We see that, we recognize it. We call that a consolidation period. We draw lines like this and we say, yeah, unless it breaks out of it, there's nothing there. Then it accelerated and then it sort of decelerated, but always in this downward consolidation until all of a sudden we got this. The buyers got together, they had a secret meeting. They said, look, enough of this. Let's rally up. Let's get together and let's make a smash and grab play. Bam, they did. The buyers came in 1, 2, 3, 4, 5, 6, 7, 8 days, just buying, buying, buying. You can see the volume was there. That was representative of something that worked out great. But that's not enough for us. We're like, great. Let's let me see what the sellers. How do the sellers answer? Well, the sellers didn't do much. They didn't put together one of those strings of big red candles. If they had done that, we'd still be watching, but they didn't. They only sold down a little bit, a few percent. They sold it off. The stochastics moved back. Confirmation, right? That's what I would expect is for that. And then we got our turn, our bounce. It found a new low, a much higher low, found support, started to turn up, and we got our confirmation trigger from the stochastics. So to me, what I'm seeing here is that the buyers have done enough that I think they're likely to continue. And whether it's that they've done enough or whether that after they did what they did, the sellers didn't show up. Maybe they show up now, but they haven't shown up yet. So there it is. And now this turns into our trade. And so what is the stochastics in this one tell me? Well, for me on the 7-3 setting, I believe the default is 10-10. At least on this. Some of them it's 14-5. Let's add another one real quick just to kind of like show this. So I'm going to still do a slow stochastics. That wasn't enough. Let's go slow. Stochastic slow. 80, 20, 10, 10. So let's just add that one. Now, if you look at that one, it's similar but different, right? It's barely starting to pinch. Barely. Like today's the first day that it started to turn up. Why? Because both calculations are looking back 10 days. A fairly standard, and this is actually the time frame that I learned on, was 14-5. 14-5 It's pretty standard. Very similar. Also, just barely starting to turn, whereas 7-3 already turned. So I'm at least as far as this one goes, a little bit ahead. I would rather have a slightly more responsive. So the fact that the 7-3 turned when this one was pinching is confirmation to me that that's what I want. Um, I want that from my indicator. I want it to be a little faster, a little more responsive. Um, PLT and swing trade. Ah, Peter, sorry to hear you're not feeling well. Hope you get to feeling better, my friend. Okay, let's go look at the VIX for a second. We haven't talked about the VIX yet. Someone mentioned it earlier. They wanted to talk about it, of course. Ooh. I'm gonna say this is still technically now. This is what we're looking at here. We're looking at this body and these lows. Why are we looking at those? Um, because we think that that was where it went up, back down, and turned for a higher low, higher than this one. And we said we would love if this could just break through that and sort of give us a reset. It hasn't. If we stall here and then tomorrow, let's say we just have a kind of a sideways day, and the VIX just sort of gives us one of these doji indecision days. And then it bounces and turns. Even though, I mean, we did get a lower high right here. And I'm gonna actually give my score a positive for that. That was good to see. It's like great. We didn't get back up into this fearful area. But the problem is, as we had that lower high, it's not seeing a lot of follow through. That lack of follow through is absolutely concerning. And I'll tell you this, we talked about bearish alerts, a bearish watch list. Seeing that right there is definitely something that is likely to motivate um that. So yeah, there it is, right? There's the VIX. Okay, let's go get to our watch list. Um okay. Shit. Let's get to the top. And let's get rid of that. Alcoa. I think Alcoa actually looks like it could be tradable here. We were in this consolidation. It ended up kind of busting out, pulling back. Then it held, got back. I'd say to the same high, but if it pulls back and stays above the 50 and can actually turn out of that, I'd be open. Apple just kind of sitting on top of its 200 right now. Archer Daniels in a, I would call that a pennant pennant formation. And you might think, well, what's the difference between a pennant and a flag? That's it. Literally. And literally it's exactly what you see here. It's usually one day that sort of pops it out of that. Otherwise, that's exactly the same kind of a consideration. And we trade them the same, which means that if we break out of this, that's our signal, right? So if it did something like that, or if it just meanders on down to 70, then that's just a bounce trade. It's no longer like a, ooh, I'm trading. So a flag, a pennant, those are those are technical patterns that have specific definitions. Um, anyways, anyways, AMAT. It's sort of following this trajectory. It's not quite on par, but it's very, very close. AMKR, no. Amazon, ooh, see, Amazon. I felt like Amazon gave a turn signal here, but it just there wasn't enough upside where I was not getting anywhere. Like I was reaching to get like 2.5 to 1. I'm like, I don't know. I think there's better. I think there's better. If I encounter one on the list that you're in or thinking about, let me know. Let me know. APH, ASX sitting above the 50, but it's kind of failing to launch here after this consolidation. AXP still financials are really struggling. Really, really struggling. Alibaba, no. Earnings coming up soon. Bank of America, you can see is low. BCS is low. Budweiser, I said there was something about it. It had such a heavy push for a little bit there. And now it's just sort of like everyone's realizing, nah, there wasn't anything there. We are not an $80 stock. City. What was the next one on the list? So AMAT next. Okay, ASI coherent. Ooh, we're close. Let's see. CF actually. I'm gonna say CF is close. It's starting to possibly find some support here at this 120 level. If this volume continues diminishing, yeah, let's think about CF. That's a possibility. Coherent. I said it would still have some potential here. Held support, big jump today, 8%. Nah, I can't do it. Oh, here's a big jump though. What would this look like with a Heiken Ashi candle? Okay, what if we did a stop below today's Heiken Ashi candle? Yeah. 243. No, 245. 245. I mean, that's still a 20 point. That's a 20-point gap down. We only think this is getting to 305. So we've got 40 to the upside. I mean, that's a 2-1. That's a barely a 2-1. I don't know. It doesn't seem tradable to me. Cisco's trying to move again. Delta. Dow Chemical. Nope. Nope. Just sort of meandering around that new resistance zone, it seems. I would still look for more of a pullback before trying to pull the trigger on this one again. Ford is down. GE, no. I wonder. Yeah, maybe industrials is a place we should search. We didn't. What day is today? Wednesday. Tomorrow we can search. We could do some searches. Gold is down. General Motors, Google, Goldman. Um, Home Depot. Consumer discretionary just really is not seeing hardly anything at all right now. Just not a lot there. Let's see here. Uh, HL. Let's pause for a second. I want to go pop into the um well, you can see the buyers tried to break. They were able to break the body range, but not the upper range. Sellers pushed it in, and same thing is happening now. Breaking the bodies, but not necessarily the shadow. But their sellers are trying. The sellers are trying. Okay. Yeah. This candle still has 2 minutes. Has 1 minute. And it looks like the sellers are trying to make a break. So those of you in your day trades, be careful if it breaks. It certainly looks a little concerning. Okay. Where were we? IBM. IBM, good signal, kind of a pause signal here today. Um, but uh, it had liquidity concerns. Did not end up building the trade because of the liquidity. Intel, I think that Intel definitely looks All right. Okay, there we go. Intel looks viable to me. Sorry, lost my train of thought. Consolidation. That's enough. I don't need huge changes. I just need to see that, the buyers did something or the, sellers did something. Um, they did enough here that's pulled back. If this stabilizes and then turns, then yes, I've got a viable trade to consider. Okay. Anyone trading any of these or trading something else? Let me know. Or are we just kind of all, woof, look at Lumentum. God, this thing just flies around. I mean, it's up 11.5%, but it's a choppy one. It is a choppy one for sure. Okay. Lamb Research. Well, I'll tell you, after a little bit of a miss, it's recovered to some extent. MasterCard down still, Meta down still, Monster struggling, Morgan Stanley struggling, Microsoft. Micron. Well, I'll tell you, Micron really ended up getting where it wanted to get. That was an interesting one. Netflix, we were thinking about. Still holding its support. It's like roadworks proceed with caution. Yeah, right. Um, is anyone in the Netflix? Nvidia. Palantir holding up. The Q's kind of sideways today. Rocket Lab. Oh goodness. Oh goodness. Stephen D, what are your thoughts? We had a breakout with volume. It's now basically giving it all the way back down to the previous level. Um, a lot of inconsistency in that pricing. Okay. Ross Stores. I think Ross Stores is actually setting up. It doesn't have great liquidity. I took the last one. It works out okay. It wasn't fantastic liquidity, but you know, I've seen worse. RTX defense stocks, whether it's RTX, LMT, NOC, um, any of those are all going to look very similar They do seem to be in somewhat of a setup type mode. So we're looking at those. Silver down. SNDK, good one there. That one moved. So those digital storage still doing all right. SPY. So we broke but held. However, from a day trade perspective, if this thing tries to come up and rolls back down, I'm looking for lower lows coming out of that. So keep an eye on that as we move forward into the morning. STX. That's a weekly. SYY. No. TJX. Tesla kind of sideways. Taiwan shipping sideways. Vale. Viking. BOD. Western Digital. I think that was it right there. And then it sort of paused and made this move. Yeah. Okay. Walmart. Yeah, even Walmart. Look, it tried. It's you can see it's really stalled out. Um, as long as it stays above the 50, you can see there's a support level kind of through here. I would still think I didn't end up pulling the trigger on this one. I was watching for it, but I didn't end up pulling the trigger on that one. Um, yeah, I still would think maybe. Okay, that's our watch list. Anything I missed? Anything you want to see? Oh, El Jago said Spotify. Let's take a look. That's been on the list before. Yeah. Okay. Okay. I like it. It's trying, right? Um, yeah. Okay. Still okay with Rocket Lab. Bear call at 90, 100. Break even at at 85. It's a bear call or a bull call? You want Rocket Lab to head down? I thought you were bullish on that one. AMD, Vladimir says AMD. I like that Spotify. AMD. Ooh, yeah. Okay. I like that. Holding on, trying to get that hold that support level and make another move. Yeah, I think that makes sense. Um, yeah, okay. Stay below 90. On Rocket Lab, below 90. Oh, you have a 9100 bear call spread. I see. I see. So you basically have this. As long as it stays underneath that, you'll be fine. Based on yeah, that I think you're fine for a couple more weeks. Yeah, I would say so. I would say so. Okay. Well, likelihood of a new trade alert today, probably small. I'm not seeing anything there. I'm not seeing enough that I would want to go bearish. So there you go. All right. Well, listen, guys. Be careful out there, obviously, in this market still. We're not responding very well to the inflationary data. Hopefully, we can stabilize here and see what comes next. So good to see everybody. Have a great rest of your morning and your day. Glenn will be here tomorrow morning. I'll be here tomorrow evening for a Q&A session. As always, happy trading.